Hello everybody, Dwayne here from DRFX, Forex Swing Trading. Your US dollar daily chart. Interesting developments taking place on this currency pair over the last couple of days. And going to be taking a look at the trading possibilities that this currency pair could provide for us over the next couple of days and weeks, as we take advantage of what I expect to be a strong rally in favor of the euro over the next couple of months. Now, as you can see here, the market has formed this large pennant consolidation on this time frame of the daily chart. And what is basically happening is that the market has been creating these large waves of bullish and bearish movements, which led to the formation of the resistance boundary and the support boundary that we see here. Now, more recently, we can see that the market attempted to start a breakout bearish below the support boundary in favor of the US dollar, but this has stalled as the market moves sideways instead of continuing the movement bearish. And we're now seeing where there's a very real possibility that we're going to see the market rally and head back inside of the consolidation. Now, as you would have remembered from my last video, I had said that even though the market has broken out below the support boundary with this fairly strong candle, the supporting characters, so to speak, were not supportive of the breakout bearish, of a successful breakout. Even though the market was in a downtrend and we had this breakout, these candles here were fairly volatile. Usually when we're talking about a breakout taking place from such a large consolidation setup, the market needs to provide us with either a small consolidation setup here or a small counter trend line. Neither of these has presented itself here, so that was a red flag to tell us that the breakout was not likely to take place. So an awareness of that fact that the market usually needs one of those two types of setups before breaking out, would have allowed us to predict that this was going to be this had a very low probability of actually leading to a breakout. So this is why it's very important to be aware of these factors. So it was no surprise that the market actually started to move sideways and is now threatening to head back inside of the consolidation. So unfortunately, a lot of short positions that would have been opened up here in anticipation of the breakout short would not have been successful. This is another common trap that the market sets in terms of false breakout reversals. What you find happening is that the market would sometimes give us what appears to be a strong signal to start the breakout at one end of the consolidation, and then suddenly take out this signal as the market reverses sharply and aggressively back inside of the consolidation, sometimes breaking out at the other end of the consolidation. Now, there are several reasons why this can take place. One of which is that we could have a weak breakout signal, or even if we do have a strong signal, if it's against the main direction of the currency pair, main direction of the trend, or if as I said before, the breakout candle is not supported by a strong setup in the form of a consolidation or a counter trend line, then the breakout will fail. So those are some of the main reasons why false breakout reversals take place, and why we need to be aware of these factors. So what is likely to happen is that the market is going to be breaking above this downtrend line to start an uptrend in favor of the euro, and then rally back towards the major resistance boundary of this large pennant setup here. So coming back to this chart once again, depending on the type of trader you are, your targets are going to be different to take advantage of this expected rally. If you're a long-term trader, targeting at least 500, between 500 to 1,000 pips, then your target is going to be the resistance boundary here. We're talking about a movement of close to 1,000 pips. Where we are now is 105.90. Let's just round this off to 160, 10600. Resistance boundary is at the 114.75 level. So we're talking about just over 800 pips in terms of the movement that would take place towards the resistance boundary. In terms of swing trading, we're talking about trading targets of between 100 and 200 pips. So we're going to be looking out for that first possibility once the market gives us a strong enough signal at this area here. So I'm going to be looking out for an ABC signal or a consolidation setup, or maybe even a double bottom formation that would give us a strong indication and a strong signal to get things going bullish. And of course, along the way, we're going to be looking out for other trading possibilities, because usually when it comes to a movement of this size, the market will take a bit of a breather and pause and move sideways before continuing its movement towards the major target. And of course, if you're a day trader or scalper, there are going to be even more chances of movements along the way as you target your 10 to 100 pip targets as part of this movement. Now, this expected rally of 800 pips on a Euro US dollar is basically in sync with the average monthly range of this currency pair. Usually over a 4-week period, this currency pair moves by 800 pips, and this is usually divided into 2 weekly ranges of 400 pips. So that is why I expect that during the course of this movement towards this resistance boundary, the market may pause somewhere in the region, perhaps halfway, and then provide another signal to continue the movement. This is generally what takes place when it comes to weekly ranges of currency pairs. The major target would be identified. The market would be moving towards the major target of the monthly range, but on its way there, it would pause, move sideways, pull back before continuing the movement. So this is what is likely to take place here. So the first trading possibility in terms of a weekly range target, a swing trading target, would be to aim for the movement that takes place in this region. We would then wait until the market goes through this transition and then look for another trading possibility to take advantage of the movement to the resistance boundary. So that's the situation on this currency pair in a nutshell. We're looking at it where the market is going to be heading bullish based on the failure of this breakout bearish. So we're going to be looking out for bullish possibilities to take advantage of this movement, and we're going to be capturing trading gains along the way in keeping with our respective trading style and the trading targets. So good luck, and until next time.